Thursday morning. Michelle McKinnon is here, Scott Martin's here, Susan Lee is here, and we're going to start with Lyft. That stock took a big hit yesterday. It was down 11%. So, Michelle, first to you, is this an IPO disaster?
I mean, it could be, Stuart. I think first and foremost, it's probably too early to tell. I always tell my investors, at least wait a couple weeks if you're really hungry to buy in, and then at least wait a full year if you're thinking it's a long-term play. But I will say this, Stuart. It could be a blue apron where you saw that stock price go from $9 to $1 and it has not been able to recover. And a lot of that revolves around profitability. Yeah. Like, can Lyft be profitable?
Because they're losing $900 million?
Yes.
$900 million.
But it also gives Uber pause as well, because when you are basically going at a valuation that's 40% higher than what you did in the private rounds, that's called greed. And I think Uber is taking a look at that and reeling back from their $120 billion valuation, saying, okay, 90 to 100 billion is probably more palatable for investors.
Yeah, it's not great for Uber. Look at this, the performance of Lyft.
But who knows? It could be a nice lesson for Uber to not make the same mistake. So.
Okay, real fast, look at Bed Bath & Beyond. Ouch. First loss, first sales decline in its nearly 3 decades as a public company. The stock this morning down about 10%. Huge loss. Scott Martin, that's an example of retail ice age, isn't it? Because Bed Bath & Beyond is down because of online selling, in my opinion.
Yes, which is still not a big part of retail sales, you know, somewhere in the teens by many measurements, Stuart. So a lot of us think about how much we do online, and really it's not even penetrated the overall retail landscape really yet, but it is starting to. So yes, Bed Bath & Beyond is getting hit, and certainly some of these other names too. But here's the thing. I mean, I think with some of these pickups in some of these names, eventually when they do fall like this, I tend to like to pick some of these up because, as we've seen with some of the other retail, when you do have a pullback like this, that's sometimes a chance to get in and ride back a few percent.
I'm not sure I would buy a retailer at the moment, and I say that because of a UBS study. Listen to this. They say that 75,000 retail stores need to close by 2026 because of online selling. That's 21,000 clothing stores, 10,000 consumer electronics stores, 8,000 home furnishing stores, etc., etc., etc. I wouldn't, if they're saying that, I wouldn't buy a retailer.
It's rough numbers. I think, I don't feel sorry for them, Stuart, because the writing was on the wall. I think particularly also, which a lot of people aren't talking about, it's the millennials that are driving this move to the online site. And it's not like we all came out of nowhere, right? Millennials have been the largest population for a long time now, and retailers should have acknowledged that and realized what millennials wanted, and we wanted convenience, and that's online. So I don't feel sorry for them.
Scott, I don't care what the dip is in any retail stock. You can't pick winners in an environment like this. It's extremely difficult.
I actually disagree. I think there's a couple winners you can buy. I mean, we just bought TJX company. TJX is the symbol, and really like that one as a standout amongst retail. And the funny part, Stuart, you hit the numbers exactly right. I saw the report from UBS, but I'll tell you, it's pretty kind of histrionic. I mean, that data and that report hits the market. It nails retail, and I believe that investors kind of run for the exits right away. And I don't exactly believe that that's the right move, because this is something that's going to shift over time, and therefore I think it's going to present some opportunities if a lot of these stocks get nailed.
What you got, Susan?
Peak margins, because we know that wages are going up. In fact, Jeff Bezos, in his annual letter to shareholders today, saying he's challenging other retailers to match $15 an hour. In fact, go to $16 an hour if you can. And I think that's a lot of trash talking, because you know, obviously you make less profit if you have to pay out more. I think that's a complete sign, though, a signal to Walmart, which is at $11 an hour, and he's trying to say, well, we do so much better, so step up if you can.
Yeah, that's a squeeze on profit margins all around, guaranteed. Check the big board. We are now, what, 4.5 minutes in, and we're up 31 points on the Dow. I'm going to call that a fractional gain. How about this? JetBlue plans to start flights to London. That will be in 2021. Disney, they're holding an investor day today. We're going to get updates on Star Wars and their streaming service. The stock's done very well recently in anticipation of this news conference, this report today. How about the price of oil? Down a bit this morning, just picked back up to $64 per barrel. Energy stocks have been doing reasonably well. They're down this morning, and Adaco is the only winner amongst this list of energy stocks that we've got on your screen right now. How about this one? Tesla and Panasonic putting the expansion of their gigafactory in Shanghai and in Nevada on hold. That's a Big red flag.
It's a big red flag. I mean, I really am not that big of a fan of Tesla just in general as a long-term hold, because I simply look at valuations. You have to pay 10 times more than Ford and other types of car companies. So I think this is a flag. I think car makers in general seem to be slowing down. So I think it's a combination of all bad signs here.
But do you see it as a car company or is it a tech company? I think it's valued at a tech company.
It's valued at a tech company, yeah. But eventually I think people are going to recognize that it's a car company.
Well,
that chart looks like there's a break down this. Go ahead, Scott, sorry.
Well, I was going to say they have great technology. I mean, the battery technology is something that I think a lot of, to Susan's point, is a thing that a lot of companies covet. The worry I have for Tesla, I agree with Michelle, is that it's Elon Musk. I mean, Elon Musk is one of the craziest wildcard CEOs that we've probably ever seen. And if he stops rapping, he's probably going to do something else that's questionable. And therefore, that's a reason alone I think you got to avoid the stock here.
I think the worry about Tesla is that the whole company is predicated on subsidies coming from the government to keep it in business.
Which they might get again from the U.S. government. That 7,000 tax credit might be extended to 400,000 more cars.
I don't think they're big enough in an era where everybody's producing an electric car.
And that's it,
and they're all coming here. I don't think any kind of subsidy that our government will offer will get them out of their
You don't think there's a first mover advantage with their technology? They got ahead of General Motors. They got ahead of Ford and everybody else.
But you've got a lot of competition in the space
now. It's
called
innovation and technology for a reason.
Okay. I still wouldn't buy your stock.
All right, fine.
Amazon, have a look at that. 7,000 employees listening to your requests on the Echo device. Now, that bothers me big time, but Michelle, it does not bother you.
It really doesn't. And I understand if people didn't realize that they were listening to you, that you would be upset. But I would buy a product like this because I want my life more convenienced. And of course they're going to be listening to me because they're trying to make my life easier and adapt. So, I mean, it doesn't bother me.
Invasiveness does not bother you. Okay, well, it bothers me. I got rid of my Echo a long time ago.
Scott, what do you say?
I'm going to risk my future on this show, Stuart, and hopefully not disappoint you too much. It doesn't bother me either, to be honest with you guys.
What?
I mean, there's nothing. I know, Susan, there's nothing that crazy I say to Alexa. My kids do. That's their problem. But you guys, nobody cares what I say to Alexa. It's similar to kind of stuff that gets posted online, that this data that everybody, I saw you talking to Gary Kay about it earlier, Stuart. I mean, gosh, I just don't think anybody cares that much about what I say to Alexa.
Scott, do not worry about contradicting me. Your future on this program is relatively secure.
That's
Susan,
what Alexa told me, so she was right. Thank you.
Susan, on the other hand, is locked in for eternity.
Eternity. For all time.
Next case. Senator Ted Cruz quoted Mother Teresa, and it was blocked on Twitter. Can you believe that? He quotes Mother Teresa and Twitter blocks it. Now, Senator Cruz is threatening to regulate Twitter, Google and Facebook because he's charging bias against conservatives. But the stock never reacts. Nothing ever happens, does it? Nothing.
Teflon.
Teflon. That's right. The next 3 weeks, Facebook and Alphabet will be reporting very strong profits, odds are. And so the stock doesn't get hurt.
Do you think this is the first time, though, that Ted Cruz and Elizabeth Warren agree on something?
That could be.
That's shocking to me. But I feel like it's kind of, reputationally, the reputational risk has been priced in, hasn't it, at this point?
I would imagine so. Yeah. I think so. Yeah, but look, Facebook's 177 and Google's at 1,200. How about that? Oh, check Microsoft. It has just hit another all-time high. Why not? Play the trumpets. I do own a thin sliver of the stock. 120. Now, Amazon and Microsoft are reportedly the final two in the running for that $10 billion Pentagon contract for artificial intelligence. I think that's why Microsoft has gone to 120 and why Amazon has gone up well above 1,800 as well.
But there was a report yesterday in the Financial Times that Microsoft might be working with China military researchers on artificial intelligence to analyze faces and track locations. Red flags were raised by experts and also politicians as well, that this might be used by the Chinese military to surveil and also to censor.
I can see the stock dropping as we speak, and your future on the show is no longer secure.
Secure. Very.
I thought you said eternity. Come on.
I did, but I lied. 9:40 Eastern Time. Thanks very much indeed, Scott, Michelle. Great stuff today. We appreciate it.